So the big news this week is the photo of the black hole, which has never been done before. But I'm not sure if it's sucking in the bulls or the bears because apparently stocks never go down anymore. According to Bank of America, if the current ramp in the stock market continues without any notable downturns, the S&P 500 is on the verge of the biggest annual blow-off top in history as the annualized return is currently about 70%. That would make 2019 the best year ever in the history of capital markets. And today's stock market romp is brought to you by the very credible data out of that very truthful and honest country, China. Who would doubt their numbers? So let's take a look at the charts. Before I begin, I want to let you know that starting next week, Saturday, instead of Friday, the market updates are going to come on Saturday. That's going to give me a little bit more time to analyze the markets and the charts rather than try to hurry up a video for midday Friday. So, once again, the market updates are going to be coming on Saturdays from now on. And you guessed it, we're looking at the 2-year weekly chart on the SPY because that's where the action is. We had a close today at 291.6 at that level there, which has definitely eclipsed that previous high back in early 2018. Now, we're approaching this high here, but that is only of secondary importance simply because, as you know, the price chart to me is secondary to the oscillators. Moving down here into the MACD, we take a look at that previous high in early 2018. This here high in late 2018 and then the current level. So we need to eclipse this high here from late 2018, but things do look fine. The fast line is accelerating and the slow line is now well above zero and the separation is good. So it looks like fuel is running for the near future at least. Moving down here into the histogram, we had a possible decline, but it reflected and on up it goes. That looks nice and good. Here into the price rate of change, the price rate of change was ballistic at that level. So I would imagine we're going to be coming down here in the near future, and that's going to give some cross currents and some chop probably to the market. So we'll have to wait and see on that. Here is one of the primary indicators I'm looking at. It's the RSI, the Relative Strength Index. Again, early 2018, that level. Late 2018 at this level here. And then currently we're right here. Now, we do appear to be heading on up, and we need to get above at least this midterm level here and approach this previous high back in early 2018. Because until then, we have a downward trend, and that's not good when the market's heading up. That's a divergence indicator. So we're watching that. Into the stochastics, everything looks fine. The fast line approached the slow line, but now it's just moving parallel above the slow line as they move up this arch. Somewhat similar to what happened here. So it looks like it's going to continue. I don't see any dip yet, but that can happen. But at least for now, things look fine. Into the volume. The volume also looks fine. There is a tapering in the volume in general, but that's not going to throw up any red flags for me. Into the Williams also looks very strong in this period here. Through there, we're having the sawtoothing, and I like to see it come back down and then reflect and go back on up, just as it did during this time frame here. That is a nice, strong formation for this oscillator in that overbought territory. Hopefully it can remain up there and continue on. So back up here to the price chart, there's a lot of things going on in the market, and I'll have a video coming out later talking to you about some of the technical indicators that are showing up here. There's a whole basket of items that the traders and technicians are looking at, and we'll go through some of those. But again, I'm looking at the oscillators. I think that's where the heartbeat of the market is, and right now it tells me things are doing fine. They're a bit extended, but I don't see any slowdown here in the near future. So we're going to keep a close eye on this because we don't want to make any mistakes. When you make mistakes, you lose money. And you know the two rules. Rule number one, don't lose money. Rule number two, don't forget. Rule number one, Warren Buffett. So for today, that's ChewDog Charts. Thank you.